scenario here with the Dow as well. From here, let's say. And then we broke out. So you have seen also how yesterday I was mentioning on the FOMC that I found it very strange why it moved so much and then they move it down again, right? Everybody remember? So I didn't like this massive push to the upside on FOMC, which seems that it was a volatile move for another correction before they turn the market higher. So this is why I was saying don't open new trades, wait for the market, is because they do these kind of things before they move the market. That's how they do it sometimes. Hello traders, and welcome to another weekend's market forecast video. As you have seen from the intro and the before and after from one of our live sessions on May the 2nd after the FOMC on the US30 / Dow Jones, you have seen the before and afters, as you have seen. That's why I keep saying to you guys, for those that are still not members, you guys are missing a lot of content that we don't cover on the free YouTube videos, of course. This is what premium members get at ROI Forecast. You can join us with the link in the description, so you are always updated of the next moves and what has been happening in the market in full detail, and we even explain to you why some things are happening. If you want to join us, if you have any questions, send us an email at support@roiforecast.com and we'll get to you. We'll get back to you within the day. So let's see what we have for this week ahead. This is the dollar index as we usually start. We have expected this corrective move to the upside over the last week, and what we can expect in the beginning of the week, it's possibly a slow move to the upside, something like that should take place before the market can move to the downside. Noting that on Wednesday the 15th we do have CPI, which we are expecting to provide big moves of the market. Of course, we cover that in detail for our members and what we are expecting overall. The general bias for the dollar index will remain to the downside, perhaps with the CPI. So we have provided to members which instruments we deem more valuable for trading and what to look for in specific details over the live sessions and the weekend's market overview updates we provide with a video and a report, member only content, of course. So dollar index still biased to the downside. This is what we should be seeing from the next week onwards. For the dollar yen, we should also expect sometime within the week the turn lower, and most probably we are looking to break below the low from the 3rd of May. So we should be ideally heading somewhere towards the 150 area, 149, 150 area, before anything else can take place over here. So overall, not interested for any buy setups for the dollar yen for the time being, with the overall bias to remain to the downside. For the euro dollar, as you have seen, we have been forecasting these moves on point over the last few weeks. We have got another pullback as we expected last week to another extension area, which we have seen a reaction from the buyers. However, we can still see more downwards and corrective structure to take place in the beginning of the week before they will get ready to move the market to the upside one more time. So the overall bias for the euro dollar remains to the upside. It should ideally be targeting the 109 area at least for the time being. For the pound dollar, we have got another pullback as we have been expecting last week over here. We have seemed to found some support in the last day or two. So we can expect another move lower as a corrective move to complete before the market gets ready for the next acceleration higher. So the overall bias for the pound dollar is also to the upside and not interested to sell it at all, only looking for possible buy opportunities in the pair. For the pound yen, similar ideas we have been discussing over the last 2 weeks. We are expecting a pullback minimum to take place. We have got the first part. Now the market is bouncing and should be getting ready for another move to the downside. So not looking for any trade setups at this pair at the moment. We are just monitoring the price action to determine possible clear setups in the near future, but the overall bias still remains to the downside, at least for the short term in pound yen. For the EURUSD, very simple. We have been biased to the downside for a long time from these structures here. Nothing really changes. The market overall bias is to the downside. We are just moving downwards with some bounces. Possibly we get a bounce in the beginning of the week over here, something like this, before the market turns lower once more. So overall, not looking for any buy opportunities in the EURUSD, with more downside potential still likely. For gold, as you have been seeing over the last week, we expected the turn to the upside to take place. The market can see a very small pullback in the beginning of the week, not something major. And then ideally we should turn to the upside one more time to make new all-time highs again. Buyers should have been buying from this area over here. As of right now, you shouldn't be chasing the market. This is the right way to trade. We have been mentioning to the members, if someone wants to buy gold, this is the area over here, 2300 levels. And right now, most of the traders that have been buying from here, they have a risk-free position and wait for the next move to take place. So not looking to sell it. The market is still bullish and most likely we will see new all-time highs again in gold. Oil, we have been able to forecast this decline from this extension area as a 3 swing pullback, at least for now. We have entered to another extreme area of 77 over here, 76.9, which is the area we have been mentioning to reach. And as of right now, we are expecting to see how the market will behave in this area over here. In our view, as you know, for the last few weeks, we are still saying the bigger picture for oil can still be in downwards pressure. So if we see just a corrective bounce over here, the market should resume the decline later down the line. For the time being, we will need to see how the next week or so will develop over here to determine whether the market can make another push to the upside first, or whether after a bounce here it will turn lower. So not something that we like trading at the moment, just monitoring most of the time to determine what it wants to do next. Bitcoin, we have broke this corrective trend line over here, and we can expect the market after some consolidation over here to turn to the upside again. So the overall bias for Bitcoin remains to the upside as well. Alternatively, if it sees a small spike lower, it will still make the push higher. So not something that we like to trade for the short term. We are overall biased to the upside for Bitcoin since some time. And overall, the cryptos should see another leg to the upside at least. This was the buying area for Bitcoin, the 59,750 to 51,700, and we believe that based on this reaction, this is a pullback which will see a big move to the upside later within the next week onwards, and we will see how the market will develop over time from here. For the SPX, S&P 500 cash index, this is not a 24-hour tradable instrument. That's why you see a lot of gaps. This is trading between the US stock market trading hours. So we have expected this move higher after running flat corrective structure here. We have got the move exactly as we have been expecting. So from here, the market will decide whether it will do a small pullback and go to make new all-time highs, or whether it's not going to make a small pullback and it can simply do a very small tiny one and then continue nesting to the upside. This is also possible. So in either case, we are not looking to sell or buy this one at the moment. Our members, they know what we are expecting and which are the criteria for another possible trade. Buyers from this area should be buying this market and not from here. So now it's to see how Monday, Tuesday will go. We can see a small possible pullback, and then the market should go and make new all-time highs once more before anything else takes place. So the overall bias remains to the upside still for the SPX. To finish off the weekly forecast as we usually do with ETFs, the 3Qs and GDX. Here's the 3Qs. We have been expecting this push to the upside after a running flat corrective structure here. We have been saying that over the last 1-2 weeks. The market has done that, and now we can possibly see a small pullback down here before the market finds support for another push to the upside, with potential and possible new all-time highs can be seen and taking place in the 3Qs as well, which as some of you may know, it really mimics the moves we see in the nasdaq index, nasdaq futures as well. And here we have the GDX, the gold miners ETF. We have been expecting after a pullback to continue higher. We have got the first initial move, and we can still see more upside after a small possible pullback over here. The market should be targeting minimum the 38 area, possibly to extend up to 40. We will see how that will go, but overall still remains bullish and should remain supported for the next week onwards as well. So that's it for today's weekend's market overview and forecast, guys. Thank you so much for watching. If you are new here, consider subscribing. Don't forget to leave us a like. This helps us to boost the video and show it to more traders to get more value. And of course, don't forget that if you want to become a high quality trader and you want to understand how the market works and when you should be looking for trades and when not, and how to manage them, consider joining our member area with the link in the description so we can help you become a better trader. And we will see you in the next video. Have a good weekend.